Hey, it's Brett with Be Wealthy, and I wanted to jump in today and answer the question, what is a hard money loan? What is it? What isn't it? How can you use it? I want to start with there's two ways to invest in real estate. We're all used to and very comfortable with investing in a house. We understand it. We understand the tenant inside of it. And we understand in this context, this person is paying us rent. They're paying $1,500 a month, and we can invest in this house. And after our taxes, insurance, vacancy, and management, we would want to net somewhere around, if we paid all cash, 65% of that number. The other way to invest in real estate, same thing, is to invest in lending, in the debt side. So there's two components to debt, right? There's a deed of trust and there's a promissory note, an agreement to pay, provided there's a loan on it. So now that we understand what it is, what are the biggest differences between a hard money loan and a traditional loan? Let's first talk about credit. Some lenders will pull credit, but they're actually not really looking. They're looking to see, are you paying on your current mortgage and your other housing obligation? Over on this side, right, so it's less based on credit. On a traditional mortgage, it's entirely based on credit. Next thing, let's think about time. How long does it take? A hard money loan, it could happen tomorrow, right? Immediately available. How long does a traditional loan take? 45 to 60 days. Next consideration. Who's the loan actually based on? It's all based on what are you buying. It's based on the asset itself. All right, next thing, what will they lend on? Property type. You've got commercial, you've got land, right? Depending on the lender, they might do mobile homes, right? There's all kinds of things they do. Over here, primarily, right, the difference is going to be they're dealing with single family homes. So the next thing to think about, what are the other things, right? We're gonna have an appraisal. We might have, what about inspection? Other due diligence items, okay, that come along. Right, on hard money, typically they might have a formal appraisal. Overall, most commonly, you're going to have the hard money lender do it themselves. And the last thing is overall, what's the complexity? A hard money loan, right, it's very, very simple to do. It is a quick and easy process if you're with the right lender, as opposed to over here, I would say the traditional lending business is anything but simple today, right? It's very complex, lots of people, and it takes lots of time. And so those are really, what do we got? 1, 2, 3, 4, 5, 6 of the main things. So when would be the time that you actually need to use a hard money loan? First of all, I think about time, speed, right? You need to get something done quickly. The property needs lots of repairs. And the lender really wants homes that are all put together and done, where hard money loans are typically properties that need a lot of repair, or they're not traditionally financeable today. It might be a property you're buying as a rental property that needs some work, so you're going to rehab, you're going to rent it out, and at that point you might refi out of that hard money loan. So a traditional hard money loan today looks a lot like this. You're buying a house for, say, $300,000, and that's your purchase price. Now, typically you're going to always be buying that property at a discount, or you wouldn't be buying it. So you're an investor, your sole goal being profit. So let's assume you're getting that house is worth $330,000. You're getting roughly a 10% discount here to buy this house, and you're gonna put 20% down. So you've got a loan amount of $240,000. And let's see what that looks like. So $240,000, a normal setup today would be roughly 12%. So your monthly payment at 12% interest is gonna be $2,400 per month. And your 1 to 2 points is somewhere between $2,400 and $4,800 in points and fees. On a hard money loan, most loans are 6 months to 12 months. And if you're looking on the rental side, those could be up to about 24 months, is as long as you typically see in a hard money loan. The last thing I want to talk about here is, who is this for? Who's actually using a hard money loan, right? If you are a flipper, if you own a rental property that has a small mortgage balance, it's free or clear, and you need to access capital because you want to make another investment, you want to put money in here, and you need money for a short period of time, this could be an option for you. If you're buying a rental property that needs a lot of repairs and you know a traditional lender won't fund it. Also, if you need to close something on the investment side, any reason you need to close very, very quick, because sometimes speed is the answer to the deal. Hard money lending solves the problem of, how do I buy properties that need lots of repairs if I don't have all the cash to do it myself? Hope this answered your question on hard money loans, and I'll see you back here for our next video.